Yes, welcome to our corporate accounting class. We are going to continue that managerial remuneration. This is one of the important topic. Frequently, this type of a question is asked in the examination, right? And in this, we are given with the informations. Some set of informations are given. One statement is given, and determine the maximum remuneration available to part-time director and manager of a blueprint company. So we are required to calculate. See, you know very well, as a commerce student, you know very well. Moreover, you are having a specialized topic, a specialized subject as a company law. So you know very well the total amount of remuneration for the board is what, manager of the company, for him remuneration is what, and director of the company is what. So all the things are given. Okay. So accordingly we should calculate. Then, first, the profit for the company, which is the profit for the company is given in the question is 6,60,000, and then we are given with subsidy received, that is eligible. Capital expenditure is not eligible. Okay, so the capital expenditure we have to add back with the profit. Then special depreciation, this is also not eligible for debiting in the P&L account. And the next one is provision for tax given. The amount of a provision for tax, it is 8 lakhs, right? First I will list out what are all the items not eligible, what are all the items we have to add it with the given profit. Okay, so that the remaining items are eligible and it is already debited, so we need not touch those points. Okay, so provision for depreciate, provision for tax is 8 lakh rupees, that should be added with the profit. Then another one is ex gratia. You know very well. The amount paid, it should be based on some rules and regulation. If it is not based on the rules, then it is named as a ex gratia amount. Right? In Tamil, it is called as a karunai togai. Ex gratia amount. That ex gratia amount should be added with the given profit. Then the provision, all sort of provisions we have to add. So the provision for doubtful debts, either given as RBD or provision for doubtful debts or provision for bad debt, whatever it may be the name called. Bad debt is different. Provision for doubtful debt is totally different. That amount we should add it with the profit, given profit. Then next one is preliminary expenses. That amount of preliminary expenses that should also be add with the profit. That is the 10,000 rupees it is given. Okay, we are given with the 10,000 rupees as a preliminary expenses written off. That should be added with the given profit. And another one important point here is we are given with the director fees. Director fees, sitting fees, all those things are different. Director remuneration is different. Remuneration is debited in P&L account, then we should add back with the profit, because we are going to calculate. Now we are calculating what is the actual amount of remuneration. Here we are given with only the director's fees, so that one is different, and it is not inadmissible, it is admissible, it is eligible item. So these are the items we should add with the given profit. So the total amount comes to 10 lakhs, yes, 10 lakhs 15,000. Okay, now from that we have to deduct some other items. What? Already some profits are included in the given P&L account. Now we have to eliminate it. Now we have to correct it. What is that? Number one, profit on investment. Any amount of capital profit should be deducted. Okay, see, those expenses are deducted from the P&L account, deducted in the P&L account, debited in P&L account. So now we are adding those things with the given profit. Whereas for the profit, those profits are already added in P&L account, that is credited in P&L account. Now we should deduct those items. Okay, so capital profit should be deducted. The amount of capital profit is that comes to, you will have to calculate actually. We are having loss on fixed assets. Return on value is 37,000 and the profit on sale of asset is 60,000. Okay, that profit on sale of asset should be deducted. No need to calculate. Normally, what you will have is cost is available, return on value is given. From that cost minus return on value balance, we have to take it as the profit. Whereas in this, no need to calculate that. Straight away, we are given with profit on sale of investments. So that 60,000 should be deducted from the amount calculated. So calculated. Now the profit eligible is 16 lakhs 15,000 from that director. So for director it is 1%, and the manager, the entire manager. Okay. So they are having 5%. Right. Now the total remuneration so calculated as per this one is 96,900, and nothing was paid previously, so straight away we can take this 96,900 is the eligible amount of remuneration given to the board.